coding this thing. Anyways, we were targeting this level here. This is also a very visible level if you look at it from H1. You see that red line there, price came tapped, so that would have been your take profit or the 200 EMA. So that's how we attacked this setup yesterday. So just to zoom in so that you guys can see the pattern. So if you are on H1, if you're a day trader, H1 is to be one of your best time frames because it sort of clearly shows you those liquidity hands, clearly shows you these patterns when they form. So today, what do we have here? For now, I've got this fair value gap. I've got this fair value gap. Are we going to have a bearish day? That's the first thing we need to look at. So I'm going to jump to the daily. Daily, however, has been bullish. Even yesterday, we were bullish, but remember what we took was an intraday reversal sell. So we are sort of between the lines here. Price can melt based on the pattern we have, which was this one. We can also get some sells actually forming today, or price can become bullish. So what can we use to determine where price is actually going? So we're going to again go to H4. On H4, you realize you've got the 200 EMA somewhere above there. You've got this order block. Structure still hasn't been broken for us to say we are strongly selling. We will only be strongly selling after a structure has been broken. So by structure, this is what I mean. If you notice, I had this level. So if we come back below here now, it will be a sell motion happening from a higher time frame. Otherwise, from now, if we do get a sell, it will only be short term. Same applies with the sell we had yesterday. That's why we had these TP points and we're only targeting 100 pips. So today, points of interest would be this broken zone here. That's number one. If we can stay below that zone, then we can get some cells forming, coming back to this liquidity on the bottom here. So if we can get a price action here or an H1 candle starting to show us a reversal, we're going to look for a pattern on M15, then we're going to execute a sell if the pattern is there. So that's my view for C3. If we come back above this zone, just be in mind that we do have a fair value gap here. So basically, this will just be like a point of interest where we can still potentially get sells. But again, if we see price come up here and they don't respect this zone and they also don't respect this zone, it will just mean that that daily time frame bullish price action which we see will still be in motion. At the same time, we don't want to rule out the fact that price could actually fall into a range. So they might still come back up here, break this and break this, but still manage to drop back to this level and maybe stay within this range. That's just a possibility. The reason why we state or we highlight these possibilities is because price can do anything. So we want to like try to outline any possible scenario so that when they eventually happen, we already know how to trade that particular asset which we'll be looking at. So we're going to leave this on H1 with this being the main point of interest for a potential sell. Point of interest number 2 for a potential sell. Then these highs here will just stand as a point of interest as well. But if we do come above, then price might push up. But for now, we're still leaning on this particular H1 price action and we'll see what happens and we are going to trade accordingly. Then going to C5. C5 actually had a nice setup. I remember yesterday we waited for it until here. There was nothing solid here. So let me go to H1 so that you can see there was really no candlestick until we got to the top. So I remember we're stalking it for this potential point of interest. You see nothing happened here. That's number one. So if nothing happens, we don't take a trade. They came to the second point of interest. Again, nothing happened here. Then they came into this zone now, which we had. So from here, initially price slowed down. So this is where we started stalking it. We're like, okay, if you actively stalking C5, just keep an eye for a pattern, right? Then what happened next now is I use that order block for a point of interest. You see that gray zone I drew, I had used it on M15. So I was now anticipating a sell based on price slowing down and actually showing that they want to reject right around the zone, the 50 EMA, and the day's open price. So based on that assumption, that price will most likely retrace M15. That's where I put this gray zone, which you see here. So from there, if you look at TDI as well, I had to wait for price to actually break the baseline, of which it happened somewhere here. This is where I started to activate my sell in anticipation of a break. Price showed that it's coming down, added a position. Then from here, it actually melted down in such a way that I actually took 40 pips just based off this impulsive move. Swap time was also approaching around this time. That's why I didn't hold, and I was still happy with 40 pips. So I collapsed this trade and closed all positions. Then if you were stalking this, maybe you're waiting for a retest here. They didn't get to that zone, but what did we get? So remember, as price is pulling back, we're waiting for a retest. You need to start looking for a candlestick which you can recognize, right? Any candlestick which you can recognize is what you use for your entry. That's number one. Number two, you can decide to use a fib. So if you run your fib just based off this impulsive move, run your fib like this, right? You will notice that price actually came into the 61. Okay, drew the I drew it wrong. Okay, top to bottom. Yeah, there we go. Price actually came back to the 38.2 area, and right on that area, that's where we got this sort of hanging man, sort of doji candle. So as soon as you see that, you should open one position. Sometimes price will still trickle, maybe spike up into this area before the sell. Sometimes they will just drop. That's why we advise you to actually open one position soon as you see something you can use on a point of interest. So what happened is price then melted from there. They didn't come back up into this area. So if you're stalking, I hope you managed to catch that trade. In terms of TP, sometimes the fib, excuse me, you can actually use it for your TP. So TP1, TP2 were hit before the day's close, and the setup was a success. So if you want to mark this, what we usually do is you want to, for back testing purposes, you just want to mark, let's say you're back testing. Let me just show you how you actually back test. So based on the way I explained this setup, you just mark where you would have potentially entered. So you want to put your arrows, you just come to inserts, you go to objects, you go to arrows, you see there is arrow down, sell sign. I'm not sure if this is showing on the screen, but that's what you do. So you want to put a sell arrow where you could potentially have entered. Then if we just put a fib here, you do the same thing. This is how you familiarize your mind to actually catch this setup. So we could also have sold there. So after you do this, then you take what is called a flashcard. Flashcard is basically a screenshot. So I use what is called a sniping tool. Take your screenshots. Then on the screenshot, you need to write all the notes. That's why you see sometimes in the group, I always talk about notes. This is simply what it means. Just write how you would have traded. So you're going to write price came to an OB. You're going to write there was a breaker here. You're going to write this impulsive move. You're going to write this 38.2. You write anything which you write the best way you understand price. So you don't have to necessarily write it based on the way I do mine. Because remember, the way I explain my note be easy to understand. So you want to write the best way you understand the market. So if there's a fib, then TDI, you want to write what the TDI is showing. If there was a squeeze or a break, you want to write all those things. Then you save your chart to whatever folder. then you can use it for back testing purposes, maybe before a session. You're going to write, I'm not sure if you're seeing this now. Let me share my whole screen here. Okay, so you want to write, save your screenshot, then you're just going to write the type of pattern which was there. So for me, I'll just write OB retest plus breaker block sell plus fib. Then you save. So this helps you when you start to do your back testing. It becomes a bit easier to see these patterns. So you want to see the patterns after they form, then you want to rewind your mind to sort of spot them as they form so that you can be able to execute on the trades. So looking at it today, what do we have? The bias is bearish. From what we explained the past few days, I think from Monday, you can see we have a bearish move. We might actually have a sell in motion. So just get ready to open a sell on C5, although it might be a late trade. Okay, price has already moved away from the 13 EMA. So remember, I always say best setups happen on the 13 EMA. If we drop down to M15, the best setup for me would actually form around this area here. Why this area? Because that's a structure which was just broken. Make it easy, you can just go to the line chart. If you go to the line chart, you see we had a move, a retest, then we broke that structure right there. So as soon as we break a structure, we had another move. So the best setup would be right here. Although price can still push from here, seeing that this is the 13 EMA, but the best setup would always form on the retest of a structure. So just checking H1, what we have, bias is bearish, M30 broken structure, fair value gap within that broken structure. If you want to run a fib, okay, so from M30, this move looks like it's just one impulsive move. So if you mark it like this, then again, you see the 38.2 in the 50 is falling within the fair value gap and the broken structure level, which we have from M15. So for me, that right there is a point of entry, and that's where I would be looking forward to get the best sells. If you run your fib based off this level, it's still fine because you can see our point of interest is still within the 56 and 61.8 fib retracement levels. So sometimes it doesn't really matter how you market, but as long as you're trading with the trend, it becomes a bit easier to actually come up with the setups. So price also, we noticed it was reacting from this level, right? From that order block for the sell. So those who caught that sell from there, they probably have taken profits because this is a one good impulsive move. We also have a broken order block here, which is lining up with this other zone. So you can see there's many things lining up with the zone which we have right now. Excuse me. So that right there will be my point of interest. I'm going to go back to M15. And I'm going to remove the fib because in hindsight, I already know that's my point of interest. So I'm just going to leave my chart like this. So in terms of entry, best entry for me will be around 46.70. Right here, 46.70. This can be a sell limit. Why are we using this as a sell limit? Because there's so many confluences lining up within this zone. So if you still are scared of sell limits, you can still wait for price to react. Because if price pushes up here, remember they're going to leave an order block. So you just wait for the order block to get broken. Then you can take your sell. TP, if you're trading with the trend, always has to be 50 to 100 pips. But remember, I always have people asking me, what's the TP, what's the stop loss? Just look to your left-hand side. If you're looking for a TP, the next zone we have is actually here. So here we need a liquidity sweep. We are also trading towards a moving average on the daily. So those are the take profit points. Even without stating the number of pips, you should already know. With this time which we've had doing these analyses, saying the same thing, you should actually know where your target is without even asking. So 30 pips is fine, 50 pips is fine. But based on this setup, we'll most likely get if we enter at our point of interest, we'll most likely get, you can see it's a 55 pip range back to that daily zone. So out of 55 pips, if you can catch 30, that's fine. If you can catch 40, that's fine. If you can catch the whole 50, that's fine. So you shouldn't really beat yourself up to say, okay, I need to aim for 50. What if your entry is a bit late and you only manage to catch 20? That's still perfect, because all you simply need to do is to aim for consistency, to consistently catch the 20 pips on a daily basis. If you catch 30, that's fine. 50, that's fine. So that's my setup for today. Point of interest, this is M15. Okay, for some reason, if price decides to drop from here, I might miss the setup because my main point of interest is here. And knowing that synthetic indices are very volatile, this will remain valid for the rest of the day because price might still then come up and still give a drop, maybe to form a W for a reversal buy, which means this zone will remain valid for a sell limit area or for a sell point of interest. So again, if you noticed yesterday, if you see this move, somebody might have given up looking for sells just based on this. But remember, buyers was bearish, price came to a zone, pattern still formed, and we still executed. Even though it was a bit late, we literally waited for this for the whole day. So this will actually teach you patience. You really have to be patient and wait for your pattern to form. Because here you can see we had this candle, but there was no pattern here, so there was no reason for us to actually sell until a pattern formed. So I hope this helps somebody as well. So that's it for C5. We're just going to leave it like that. C1, C3, we're stalking. C5, we're waiting for this zone. C1000 has been bullish. So even yesterday, I think I marked a few levels. I was waiting to see if they might give any form of sell. You can see I had marked that red line there. I was waiting for sells. I think we actually executed one sell, if I'm not mistaken, and it took us out. So remember, if we're trading against the main daily trend, do not hold your trades for too long. If price shows you that it's going the other way, just cut your loss, wait for the pattern to form. So again, today, price still bullish, although we are in a zone. You can see this zone which I put there on the daily. I don't remember where it's coming from. I think it could be H4. Okay, it's an H4 order block, as you can see, but our price though is bullish. If we do get a sell, it's just going to be short term. If you get a sell, it's short term because our trend is very bullish. So C1, we might not trade it at all, but if we see something, we might take a very short term trade. All right, so going to B5. B5, what happened yesterday is they actually gave a buy, but this buy was not in line with any of my analysis. So I did not take any trade on B500. They did show a pattern here, but this was a bit ugly considering that we were in a sell motion. So bit of an ugly pattern. Although TDI tried to give something again, it wasn't that clear, but the buy actually happened. So today, let's see what we have. Based on this price action, you can see we're trading below the 13. I would say we're still bearish until we take our liquidity on the bottom here, or until we tap into this zone here. This is something we've been explaining as well for the past couple of days. So all we have to do is wait for price to come down to these two red lines there. So the exact prices of those two red lines are 63.70 for the first one, 6370. Then we've got 63.18. Let's just round it up to 63.20 for a point of interest as well. So these two lines, this is the only areas where we can maybe get some buys from. Apart from that, this price is bearish. H1 is also confirming bearish by trading below the 13. So we do not have anything on B500. Bless me. All right, going to B1000. B1000 actually gave us a short-term buy here. Oh, Bless me. They gave us a short buy yesterday. The reason I took this buy is I was looking at this price bouncing off this level, which was the low of the day. We had taken out this liquidity. We had broken a few small order blocks. So I decided to just take a short-term buy coming back to this high, which actually played out because I think we caught 40 pips, if I'm not mistaken, or something like that. Then from there, I remember we also had buy limits somewhere in this area. They were actually for this same setup. So when this move played out, I was like, okay, let's remove the limits. That's the reason why we removed limits, because the setup I had was the buy from here to here. So when price achieved that buy without coming back into the buy limits, we had positions a current market price. The limits became invalid. So price came, extended the low, tapped into the previous day's lows, came up but failed to break an order block. You can see with the way I was marking my charts, I was waiting for it here, but again here we were approaching swap time. So I just watched what they were doing. Then what I realized is, okay, price kept pushing down, right? What I realized is from H1, let's zoom in. Let me remove this black line here. From H1, this was the initial part where price slowed down, but nothing was broken on the top side. Price didn't close above the 13 EMA. They continued to extend the lows, and they also took out the previous day's lows, which makes this setup look exactly the same with C300, just the opposite. So after taking out this liquidity, price slowed down, started pushing up. We came and we closed above the 13 EMA, showing us buys. So you could still have taken your buys there. Notice price came back and tapped into the previous day's low, this one right here. Then the buys happen. That's the trade which I shared in the group. So by knowing what price wants to do, you just have to anticipate what will potentially happen based on what you've seen price doing, based on your screen time or your trading experience. So through time, through screen time, or through back testing, you will notice that these setups actually happen like depending with how many assets you trade. You can get one of these in a week. Sometimes it might take 2 weeks, but if you're stalking price actively, a setup like this usually happens at least once a week. So yesterday was the lucky one whereby we had two, one on C3 and one on B1000. Price takes liquidity, buyers get activated, price retraces to the day before yesterday's low, taps it, and just goes wild. So that's what happened with B1000, and this ended up being like a 270 pip move. So if you caught this move today, we don't expect you to trade. It's a day where you actually take off. And I was also looking forward for price to get to 16,000. Why were we hoping for price to get to 16,000? Let me ask that question. Let's see if people have been paying attention. Why would we want price to get to 16,000? I'm going to mark it as a clue. You guys can respond on the chat item there, on the chat box. Why were we anticipating price to get to 16,000 all the way from the day before yesterday? Each time we were buying B1000, we were anticipating price to get to 16,000. Why were we anticipating that price? Does anybody know? From this buy, we were anticipating this. From this buy, as much as we're coming here, we're still anticipating this. Then from this buy, we then eventually got it. So why were we anticipating price to get to that price level? Does anybody know? We're left with about 6 minutes in this session, so it would be nice if we can be a little bit fast. Let's see if anybody's typing the. Does anybody know why we were waiting for 16,000? The reason is simple. If you notice from this high here, we do not have any clear stop hunt here. Any spiky candle up. We do not have that type of candle. So price came down. We're anticipating them to at least come spike up before they continue coming down if they want to come down. That's the main reason. So we had no liquidity grab. Simple as that. It's a matter of liquidity. So if you're trading, you will notice that this is one term I usually use, liquidity. So take your time to study liquidity. If you need help with this, you catch it on the mentorship program. That's where we explain some of these things in greater detail. And I'm sure by now everybody has made enough money to at least pay for mentorship. So liquidity, this was a liquidity area. So if you notice, price then came towards that area. As soon as we come here, two things will happen now. Either price will retrace, maybe come back to an order block to give us a buy for today, because here we've got a 1350 cross. This looks like it's a nice low. The weekly is bullish. So, excuse me, two things can happen. Price can actually bounce off here, continue being bullish if they are really keen to accelerate it. But again, the best points of interest for today's trades, seeing that we've already moved like 270 pips just today, and we're not even halfway through the day, this would be my point of interest to get a buy. Number one, I would also love to run a fib. Whenever I see price start to retrace, I'll run a fib so that I can start to get some points of interest, which are going to start at 38.2 all the way to 61.5. So this would depend with where they start retracing from. I might have to adjust the fib a little bit, but for now, this is the point of interest. I'll also pay attention to the Dayton EMA to see if price can actually respond from that area. So I'm just going to leave this marked this way, and I'll keep stoking it for a retracement. Then going to step index. Step index, we were anticipating a sell yesterday, but as much as we wanted a sell, I want you to notice that on the daily time frame, price was trading between, it was on the 13 EMA yesterday. If we zoom in, do you see that we tapped the 13, we tapped the 50? So remember those moving averages, if price is moving towards them, they will act as a dynamic resistance point. As long as you know that information, just know if you see that reaction, you can now actively look for a short-term sell if you are in a bullish motion. So here you will notice that we had this highest high, we had an order block broken and retested, short-term sell back into the zone. So this was a clean scalp. Price came back into an order block, again another clean scalp. The moves were not too clean. So step index, I usually prefer scalping it. So if you had taken step, or if you're trading step index, that was the sell trade we have. Again, we are right on the 13. I'm still looking forward for buys. I can only start buying after we close above the 13 EMA. That's when the long-term buys are coming. So today we've already moved a bit. So I would love to just wait, maybe wait for it on H1. Just keep stoking. Let's see what they want to do, because they could do a couple of traps before they actually push up. So again, notice how this level from the day before yesterday was actually respected by this sell. So if you're selling, that could also have been a target. Then price started pushing up. They might come bounce off here, then push up. So point of interest, I think it will be this red line, wherever it's coming from, or 8200. Once price gets to 8200, that's a point of interest for potential buys. But the best setup, I think, might happen tomorrow or the day after the daily candle closes. So if you're trading step, just make sure you just stoke for that level there, 8200. Then you can take your trade. If nothing happens on that level, then there's no trade. Something else will actually be happening. BJ10 gave a nice setup yesterday, right into a point of interest. If you don't know about this setup, just go into yesterday's analysis and watch how we explain J10. I won't waste time explaining it. And from there, price accelerated. And I hope you guys took profits on that one. So going to the daily, I've got a minute left here just to quickly round up. I'm going to remove these things. Okay, there we go. So what do we have here? Most likely this price will still be pushing up. So right now we are in that retracement motion based on these 3 days of up move. So potentially we can come bounce off this red line, which you see, that red line there on the bottom, which is actually around the 200 EMA or around price point 91490. That's a point of interest for potential buys, right? So this level, you can see price is just playing around it. So if you see price not respecting a certain level, you just delete it. It means that level, it does not have any significance. You can just remove it, then wait to see what price does. So again, point of interest, this order block here, which was respected yesterday, we just extend it and we'll potentially wait for buys or possible buys around that area. But if we do break, then price might still push down. So we're running out of time. Thank you so much, guys, for joining today's session. If you still have questions, please send them in the Telegram group and we can have a quick discussion. So thank you so much for making time. Enjoy the rest of